Hey everyone, welcome to the StockMiner.com studios here in the Black Hills of South Dakota. I am your stock mentor, Brian Johnson, and it's time to get back into the new year. Things have been very, very hectic, but I'm going to start finding time to do these videos on a hopefully a little bit more regular basis. Usually once a week has been the norm. I'll obviously try for a couple times a week, but no promises there. We'll always do our best. However, it is time to start doing these again so that you guys can at least follow along once a week on where I'm at and what I'm thinking going into the market. Sometimes it's nice to have other people's ideas and opinions on where they think it's going. If you have never been here before, haven't visited me before, you'll know that I'm pretty objective, if you will, on my charting. I don't really get too wrapped up in, oh, I have to be a bull or oh, I have to be a bear. I'm very much neutral in that respect. I only care about what is going to make me money. I don't care whether the market goes up or down, just as long as it moves and as long as I'm on the right side of the trade. So let's break into it, guys. It has been a long time, and you can see what the markets have done. They've been up and they've been up and they've been up, but we're going to recap a couple of quick things back here in the middle of December. See this big move here? See this big move here at the beginning of the year? Guess what? All gaps. It's been very, very difficult to play this market because these big moves are coming on gaps. And the gaps are kind of the theme that we've seen the last good month, I would say, for sure. Leaving a lot of traders in a quandary. You wake up in the morning and you're like, well, now what do I do? And it's been very, very difficult. We saw the same thing again this morning. We had been wandering sideways for the longest time. Look at this very well-defined range of 12.3 to about 12.5 that we wandered around in for a good 2 weeks since the beginning of the year. We're right back in that range, even after today's gap up. You can see from the this big white candle here is not really indicative of what happened. It was a big gap to start the new year. And we're right back to break even. We're not going anywhere. This market is getting tired. You must be cautious. Now, I'm not going to tell you to not go long, but I am going to tell you to be cautious if you decide to go long. We still have good opportunities, probably back above 12.5, 12.550 in the Dow. I like it short below 12.3 and 12.250 in the Dow. For your long and your short opportunities. But after this big consolidation, we get a big gap up, and there's just no follow-through. From an Elliott wave perspective, maybe we're closing in on the top of a new move. I think that's very, very plausible up in here. You just want to be very cautious. So let me reiterate, if you're going to go long, that's fine, but you must be very careful about it. When the markets do decide to turn or to flip or to drop, it's not uncommon to see that happen in a very quick, very violent, if you will, way, where you see big red candles to the downside. And if you're in a long trade and you don't have your stops in place, or you get gapped, if it gaps down over the course of a night, you just don't want to be a part of that. You really want to make sure you're out and clear before that happens. Let's look at the Dow on a daily perspective, and this gives us a very good sign again. Look, at the beginning of the year, here's where we started. Nowhere since then. This 12, let's call it 12,450 for the most part. We've been dancing around it, a little bit below, a little bit above, but we cannot seem to leave this magnet of 12,450 here on the Dow. A little bit of up today, a little bit of down. A little bit of down yesterday, a little bit of up. We can't seem to leave this area. It's a consolidation. Now, this doesn't mean that we can't blast our way to the upside and the bulls can't get a big run on, but it seems very, very tired, very labored up here. All these gaps that we're seeing are not met with heavy buying, and that is a little bit on the concerning side to me. But I'll tell you what is nice. It's nice to see the participation back in the markets. You can see, and I was telling you even before, I don't know when the last time I did a video, it was like, I don't know, 350 years ago or something. But back in this area when I was still doing videos, I mentioned, coming into the last couple weeks of the year, expect the market's volume to drop off and drop off big. Always does. Here it is. It's not like that was some Nostradamus type prediction. This is just what happens in December, especially the last week or two of the year. But it's back. We're back up into normal levels now, and we'll wait to see if that doesn't have some sort of an effect on the markets. But you can see we're not going anywhere. There's no aggression at all from either side in this market currently. So what do we do with this? Well, if you're a swing trader, you sit on your hands. There's nothing else to do, guys. You have to be very careful in this area. There's a little bit of opportunity now and then from a day trader's perspective, but from a swing trader's perspective, there's just not a lot to play with in through here. So be very, very cautious with your trading. The NASDAQ 60-minute looking very good. It's been following this line beautifully all the way up. Like this push tomorrow, if we can push above this 2400, I'd be looking at that, but I don't want it to gap, okay? I'm not real big on the whole gap above an area. If we can sweep up and through 2400, okay, you might have an opportunity to go long. To the short side, it's got to get back into this area for me to look at the NASDAQ to the short side. I'm not a big shorter of the NASDAQ. I'd rather short the SPX or the Dow before I short the NASDAQ just because of its strength. I feel the same way about the Russells. But back in these areas here, okay, maybe you've got a legitimate reason to go short the NASDAQ, but as it is right now, this push up has been relentless, as would be expected. NASDAQ is one of the, if not the strongest indices out there, with some of the tech giants like Apple and Google and those and such as those leading the way. Here it is on a weekly, though. We'll see where we are on a daily. On a daily, leaving us with, we can look at this candle as one of 100 different things. I'm not going to put a lot of emphasis on it, just except to say that at this point it's just a doji. Just showing the indecision that's sitting in the market. We gap up, a little bit of down, a little bit of up. Overall, nobody wants to take control of this market. So we must be very cautious with our trading until we get a heavy break one way or the other. For the NASDAQ, as I said, I kind of like this NDX back up above the 2400 area. See if we can't carry that in and through, I don't know, maybe the end of the week. We have an abbreviated week and its options expiration, so added volatility is something that is probably to be expected as we close in on Friday. Here it is for the week. You can see we haven't really there's not a lot to look at right now just because we started the week. We'll see where this closes on Friday. But let's go back here. I want to show you guys this. Going back to even before 2011. Okay, so November of 2010. We're up, what, 200 points? For you long-term investors, yeah, that's been great. I have a small 401k with a company I worked with a long time ago that I've just left in there, and I'm actually going to roll it over now. But I got a statement, opened it up. Yeah, it's down like 2% for the year. Yay. So there isn't much to really work with in through here. You can see this sideways chop, this sideways consolidation. Going all the way back to 2011, it's just static. It's all straight sideways. So you can see that there's just not a lot of movement happening within the markets anymore. It used to be that they constantly, would grind their way to the upside, and we're not there now. Must use a lot of caution. We are approaching some of the highs here, though, on the NDX, and that could make things very interesting in the markets. But we'll wait and see what happens when we get up and into these areas. 2440, 2450 being the area you really, really, really want to watch over the next few days, few weeks. We'll see how it goes. SPX 60-minute. Same type of thing as we're seeing in the Dow. Big gaps, on the way up. A big gap again today. But you can see pulling right back again. Can we hit these overhead areas? I don't know. I like it above 1300, but I gotta tell you, on the SPX, I'm very much a 5-10 point guy from that point forward. Looking at 1300, 1310, 1320, 1330 for your overhead resistance levels. It is very, very strong up and in this area here for overhead resistance, and you must be very, very careful with any and all trades you decide to take to the long side. Let me say again, I'm not saying don't go long. It's not what I'm saying here. I'm saying that if you do go long, you better manage the trade. Be careful. Especially if you're going to deal in anything indice related. The SPY, the Qs, the diamonds, the SSO, TNA, TZA, those favorites. anything indice related, be very cautious with your long plays. Don't be, I'm not saying don't take them, but you have to manage them from this point forward. What we really need here, what would be the most healthy for the market is, and for the bulls, if this is going to continue in a bullish way, is to see a nice, healthy pullback in the market itself and allow the bears to kind of relieve themselves, take some profits, make some money, feel better about themselves, and then run that market back up again. We're in a situation where we really need to see that happen. Here's the SPX straight sideways. 1280 to 1290 has held beautifully since the beginning of the year. This is just no movement whatsoever. Just the same thing over and over, day after day. Small candles, not lending itself to any real direction. A lot of the moves we get come on gaps. Very difficult to play at that point. Just have to wait for, and hopefully we'll get a break of some sort that will allow us to take a trade. Here I like the 1300 area, and to the short side, 1275, 1280 maybe, somewhere around in there is probably a better place to wait for a short opportunity. The VIX, you can see, has come all the way back down into my 20 area. Notice how it's bouncing nicely off of my 20 area. I love this. Between 15 and 20 is my things are okay in the market zone. I really watched this closely. We didn't quite break the 20. We got awful darn close. Maybe we'll try one more assault on that before this is all over with. But based on what we saw today with the VIX being up 6% and the markets being up as well, what is that, guys? Those of you who have been with me for a while, what is that? What is that? It is a divergence. That is correct. Typically what we see is when the markets go up, the VIX goes down, and vice versa. That is not what we saw today. Today the markets were up and the VIX was up. Now on a one-day basis, it's not that big of a deal, but it is something you must take note of because it shows that even though the markets are up, hedgers are still hedging. People are still getting a bit concerned about what's going on in the market, and they all kind of seem to see the same thing, and that is maybe we are due for a pullback here. Maybe that would be good. So you'll want to watch this VIX very closely as we push forward. If we do see more bullishness in the market, you'll want to watch the VIX, make sure it's starting to drop again. Here it is in the weekly, same story, different verse. Won't talk about that necessarily. We did it on the daily. Here's FAS for those of you that like to play this. I drew this channel in. It's remained in. It's beautiful. Love it. It's holding very, very, very nicely. So your trades, a little bit difficult, but if you want to take a long trade up in this area, a short trade down below 70 or so, that's probably the more conservative places to be looking for long and short. It's the same thing on a daily. If you can get back up above 79 or 80, that's a good long. Back below about 71 or 70, that's a good short here. But you can see the consolidation. 1, 2, 3, 4, 5 days of nowhere trading. Must wait for the break. FAZ doing the kind of the opposite, showing you the channel to the downside. This one I really do like, up and over. I don't know, you can get 34. If you can get above 34, it's a very conservative place to be looking to play this. I would even say above 33, that's more aggressive. 33.50, 33, you could certainly do that too. Just keep in mind it's a more aggressive trade at that point, but still not a bad trade at all if you're looking at FAZ. If this area holds, this 50 holds, look for a drop. Back below 31 is your short in FAZ. These hold true on the daily as well. The bigger, most conservative for you swing traders is back above the 20-day moving average, and then of course back, I think, below about 31 still works very well on a daily perspective from FAZ. And that brings us back to the beginning, and there you have it, guys. I'm glad to be back at it. I'm glad to be with you again. If you like the commentary, find use in it, sign up for my newsletter, $28 a month. I do it every day except for Saturdays. So it's about $1 a day on average for the newsletter itself. I have the trading room for those of you that have time during the day to sit around and day trade, you might find it useful to jump in there and follow along with the daily trades that we do. We do a lot of futures trading in there. So if you like the futures trade, if you have time to futures trade, that might be exactly what you're looking for. I've gotten heavy back into the mentoring as well. It's the new year. It's time to be setting up that stuff. If you really want to make this a lifelong thing, if you want to learn how to make consistent money at this, the mentoring is by far the best way to go. It is basically an all immersive course in trading. I call it a college education in trading. You'll do a lot of note taking. You'll leave a lot of the sessions and your brain will hurt because there is a lot of information to absorb. One thing builds on another, so it's very easy to follow. If you've been trading 20 years, you'll find it useful. If you've been trading 20 days, you'll find it useful. If you don't know anything about technical analysis, great. I can teach you. If you know a lot about technical analysis, fantastic. I can add on and fill in those missing puzzle pieces that you may have within your trading itself. Allow me to help you do that. Send me an email, give me a call, whatever you would prefer to do. I'd be more than happy to talk to you about it and see if it's for you. Maybe it is, maybe it isn't, but at least it's worth chatting about. Okay, new things coming too down the pipeline within the next couple weeks. Another new product I want to make you guys aware of. Can't talk about it really right now, but in the next couple weeks I should be able to bring that up, and that might be something else you'd be interested in, so stick around. Nice to be back. We'll see you guys hopefully again in another couple days. Bye.